Hey, Kevin here, top 1 financial advisor, two-time author, one-time bestseller, and we are here to talk about the stock market. This is going to be a very, very important video. We're going to talk about Plug, why it's down, what I think about it. So I'm going to give my opinion on it, and really show you hands-on, like what are some things that I look at to help me avoid what companies are bad and how to get in companies that tend to be good. So go ahead and hit the share button now. We had 8 shares yesterday. That's great. I'm trying to push to 10. Also, make sure you click the link for the investing summit. I'll show you how to invest like a champion. And some of these tools and tricks I'm showing you now. So let's go ahead and get into it. So first, Plug Power, who are they? What are they? What's going on there? So Plug Power is a hydrogen fuel cell company. Now, from my research, and I mean, you can just easily Google this, there's a difference between a hydrogen cell or just fuel cells and batteries. You go talk to an engineer, scientist person to really get all the nitty gritty details between the differences. That ain't me. But there are two separate things. And if you didn't know that, and you didn't know that Plug Power does specifically hydrogen cells for the most part, and they're not like an electric battery where you just kind of charge and just like a battery, like we all understand. If you didn't know that, that's problem number one. You want to understand what you invest in before jumping into it. The reason why that's a big deal is because yes, there is a $2 trillion stimulus that is floating through Congress somewhere. Except that it doesn't necessarily mean that when they push green energy or they want to invest in green energy, it doesn't always mean hydrogen power. It could mean wind, and Tesla and Plug both lose out. That's a possibility. It could be just electric vehicles, not necessarily hydrogen powered vehicles. There's when people say green, there are different segments of green. Same way when we say people of color, it could be a bunch of people, right? It could be just Black folk, it could be just Hispanic folk, it could be just Asian folks, or Asian and Hispanic folks, and nobody else. Like, you don't know. It's just a general term. So in the same way, when people say we're gonna push green energy, or even you're gonna push diversity, a bunch of types of different diversity, you got to be specific. So when we talk about green energy and we talk about that stimulus coming out there, and even last year when we said the Biden administration was going to help green energy stocks, Plug was one of those. I had mentioned Plug. Everybody had mentioned Plug as being one of those. But now that we've got something on paper, remember that. Now we got something on paper to a degree, and now it's working through Congress. It could be very good or very bad for Plug. We're not entirely sure, but you do need to know those specifics. When it comes to hydrogen cells versus just regular electric, there's also a divide here in that right now, electric vehicles are a lot more acceptable. I'm trying to think of another word I can use. Has been adopted a lot more, and I just don't think they're at a level where you can just drive anywhere in the country. But we're already building, by we I mean the country. We're already building a lot of electric vehicle stations. You can charge an electric vehicle at your home. The government has already spent money on trying to push electric a whole lot more. They have not done so with hydrogen, at least not yet. So regular electric battery vehicles are already out there, and you have the advantage of charging that stuff at your house. You cannot do that with hydrogen, and I don't know what you would need to even attempt to do that. However, the way that Plug is somewhat succeeding, or at least keeps an eye out for that, is because corporations might be a better bet for that. So Amazon uses hydrogen powered vehicles to push their fleets. Well, in theory, if I can get Amazon's fleet and UPS and FedEx, and I can just kind of go the corporate route, they're more able to push and make that happen. They also don't do cross country road trips usually. Like, you get a fleet of trucks, they kind of stay in that area, and you fly things in, send it to the trucks, and kind of go out. You don't see one UPS truck go from California to New York as anybody would if you're like traveling. So that's really deep businessy details, but these are things that are really important, because now if you're thinking, oh, well, Plug can compete with Tesla, probably not. They're two separate businesses that operate in the same green space, but they've got two separate lanes. So you do want to be careful about that. So that's number one. Right now, the country has been spending money on electric, just regular electric, not necessarily hydrogen, and it's not being adopted as much. The other problem with Plug is, and I'll pause here. this is something you should have known before you. This is something you should know before you invest in anything. So it's not just Plug. Okay, so it's anything. Plug was founded in 1997. The number of years that Plug has been profitable, meaning they made money, they pay the bills, how much money they have left over. You always want to have a profitable business. Now, not every business is going to be profitable in the very beginning. We know famously Zoom was profitable when they had their IPO not too long ago. Amazon was not profitable for many years until they became like good, because when they came the real Amazon, right? But Plug has not been profitable since 2007. They haven't been profitable since 1997 and still are not expected to be profitable until at least 2024. That's a problem. You've been around since the 90s. You've been around since 1997, before I even knew about the stock market, before Zoom even existed. You've been around for about the same time as Amazon, I think, and you have not been profitable. Yes, Amazon is a different business. I totally get that. But that is a big issue. And if you are an investor and you did not know that that was the case, that is a big red flag. These are things that you should know about what you're putting your money into. This is also a very important point that I've always brought up, and we talked about it before. This is why I discussed the 5% rule, in that you probably shouldn't be putting more than 5% in any one stock. You can put as much as you want in an index fund, but for one individual stock, you want to limit yourself, because if you run into something that doesn't go your way or what you expect, I didn't expect Plug to be down as much as it is at all. Had I put my money in Plug, I'd be upset too, but it's only as much as 5%. I can let that go and still have money in other places, and I can probably survive that type of dip. Good news for Plug is if you invested last year, you're still up 920 some odd percent. However, if you invested in Plug, let's say January 26th or February 1st, you're down about 50%. At that point in time, the company was close to like $73, almost $75 a share. Usually now it's down to like $33 or so. So these are the cost benefit analysis that you want to consider. So right now I'm going to show you a few things on the chart that I'm looking at, and again, red flags. So number one, one of the biggest red flags is in 1997. Since 1997, you ain't been profitable. And what is that, 24 years or so? You had 24 years and you never made a profit, not once. Tesla was public, I want to say in 2010, and they were just profitable like last year. So that's 11 years. Like, that's a little too long for me personally, but you did it, right? You're talking almost 2.5 times that, and you still have not hit it, and you're not expected to hit it for another 3 years. That's something to be concerned about. So what I'm going to do is show you this chart real quick and show you something else that I've talked about before with other companies that is always a red flag for me. So as you can see, over the past year, up was at 900, almost not, I'm sorry, 793%, because we're really looking at the red line here. Let me get rid of this so I don't misquote you guys. Sorry about that. So a year ago, you'd be up 793%. That's awesome. But remember, anytime that I see a penny stock, which is $5 or less, and it automatically just kind of blows up out of nowhere for no real reason, I tend to get concerned. There very rarely are you going to find a stock that was $5 a year ago and now it's $70, $80, $90 within a year or within a few months. That's kind of what happened with Plug. It's kind of what happened with NIO as well. It's happening with the AMC now, right? So here's some things that you want to see. If you go back July and you see in the left-hand corner, in July, there were about $8. In April of last year, there were just $4. And if you got in at that point in time, that's awesome. But that doesn't really make sense. So if I go back 2 years to kind of give this a little more time to a little more context, I mean, look at this. And so remember, they go all the way back to 1997. I'm not gonna go back that far, but like $2, $2, $3, $4, and then the pandemic hits, right? People get more on Robinhood, election stuff is going on, and all of a sudden it just really takes off. And y'all correct me if I'm wrong, I don't really remember anything happening between June and let's say September or so to even go from $4 to 11, which percentage wise is a lot. I could see November, we know who won. We know what's going on. We expect green energy, and it just absolutely blew up from November. I mean, really come back here, but like from November at $14 to $70 almost overnight. Anytime that you start to see a company blow up like that overnight and doesn't really have that strong of a financial history, doesn't we don't really understand what they're doing, and it's mostly hype, that's always a red flag. And that's why I say I don't do penny stocks for this exact reason. Easy come, easy go. Like it blew up since November, and now it's blowing up in the opposite direction right now. I talked to y'all about was it Aurora Cannabis was the one in 2018. I think that might have been the one that we. Oh, it was Tilray. It was Tilray. Tilray in 2018. It was a similar thing. It was a cannabis company. We were all hyped about what we thought cannabis was going to be at that point in time. Things have changed now, and it was like $20 a share or so. It blew up, and then I don't know if it got from $20 to $200 a share in nearly the same amount of time, 90 days or so, and then boom, fell right off the map and pretty much perished for years up until like 2021, and it started to happen again. So you got to be careful. Anytime that a company was dirt cheap, you never heard of it, it blows up all of a sudden, that's got to raise a red flag, because there wasn't anything that we saw that was like, this is definitively why this company is where it is. Unlike a Moderna, which most of us hadn't heard of either, they're making the vaccine, and we know that the government is paying $35 per vaccine, and there are 100 million people that are vaccinated, or whatever the number is. That makes sense, right? You know for a fact that we are in a whole pandemic, and as the best thing for a drug maker was making something to eradicate a virus. We haven't seen that type of stuff for any electric vehicles for that matter, but we definitely haven't seen it for something like Plug. So other news and notes that you want to pay attention to, and then we'll get to my opinion and wrap up. They had some accounting issues, and they had announced this a few weeks ago. You can't count. It's a problem for me. So they had to go back, and nothing illegal, but they had misstated a few costs and some really technical stuff, which changes their financial numbers. And in either case, they're not profitable. So to me, it really doesn't matter. But that's not good. You can't count your money. I can't put my money in you if you can't count your money. That's something else that you want to be aware of. So it's all bad for me. But here's the thing. Now I had to do some research to find all this stuff out today, right? But when people were talking about Plug, let's say around November, right after the election, we kind of knew what's going to happen. I had mentioned a few companies that people were looking at, NEO being one of them. I said back then I probably wasn't going to invest in NEO either, but I could save myself a lot of time by simply just looking at that chart and say, well, let me scroll back a little bit. 3 years, 2 years, even 5 years. You want to go back that far? I can see like you haven't been doing anything since 1997, and all of a sudden you're popular. All of a sudden you blew up. No, I'm gonna just pass. That's not normal, right? Normally you start to kind of see a company start to glide, and maybe they have a huge year, but you start to see some real progress over time. You don't. There's no way that it makes sense that this company was $2 last year, and now, or at least until January, it was 70. What company do you know of that is legitimate did something like that? Yeah, GameStop did that, but look at them. That's not really the model that you necessarily want to follow. So you got to be careful about that type of stuff. Even if you look at Ford, Ford has not been great. If we look at Ford, Ford is slowly trickling in the right direction, and Ford has been around for a long time, like I don't know, like the 1900s. And Ford had been good at one point into the recession. So let's take a look at that in comparison. I'm starting to like Ford. I used to make fun of Ford a lot. But just take a look, right? So this company had been doing nothing for years. All of a sudden just blew up. Like that's not in this amount of time from March to November, from March to now, that's not a normal thing that happens within 12 months. But if we look at something like Ford, you'll see what a more natural progression kind of is. And you can see here, it was down. It wasn't great. Let me take this off. It was down, wasn't great, and it's starting to kind of make its way up. And it's something that's been around for a while. If I go back 5 years, again, this is a long time for them to get to where they are, and they're still not, amazing. They're only up a little less than 2% over the past was that five? Oh yeah, clearly I click the 5-year button over the past 5 years. So it's looking great since the bottom of last year, and it makes sense. But they've been around for a while, and you can see how long it took for them to get there. If we do 5 years for Plug, here we go. Now it's loading. I was wondering what's happening. You can see they weren't doing anything. Like it pretty much didn't exist. It wasn't doing anything. No one knew about it. It was $2 a share. And for 5 years, and that's just this 5 years, it was just there. And all of a sudden, it became a thing, and now it's not becoming a thing. So you always got to be careful about that kind of stuff because it's a little too good to be true. So we're not going to get in a conversation about Ford unless you guys want to. We can talk about that. But for now, if I'm looking at it, it's still a definite no for me until I learn more about the infrastructure bill, and that's when I will consider it. Maybe it's an option for you to do some put options if you're in that type of thing. I think that would be my best play because it's an option. I don't have to own the stock, and it's probably going to go further down, so I can at least make some money on the downside. We talk about that in Investors Toolkit. If I own it, let's say I bought it in January or February, that's a tough one. What I would probably do is just put remember when I could put a stop loss on it if you haven't done it already, which these are things we talked about before. But I'd probably give it until end of June. So that would be June 30th. If it doesn't work, I'm cutting my losses. I'm hopping out. The reason why I say that is because we should find out a whole lot more about the infrastructure bill at that point in time. If we haven't heard nothing, I'm just going to let it go. And come back if things start to improve. But right now, there's too many financial issues that haven't been profitable, and it just kind of seems like more of a trend or a fad as opposed to a more legitimate company that has a legitimate future. Yes, they will tell you that 2024 is when they're going to be profitable, and that's fine. But you've had 24 years. Like it didn't make sense for me to wait that long when I've got companies that are actually doing well right now, or at least not doing nearly as bad right now, as opposed to putting my money in something that's doing the opposite of working for me and actually actively losing me money. Now, what's going to happen between now and June? I can't call it. There's no way I can tell you whether or not you're going to make any money between now and June. I think if I had to put a percentage, or if I had to choose hold the stock or trade the option, if you're an options trader, I'm probably going to go for the put options. I might look at that tomorrow. That's probably where I would go. So those are my thoughts. If you have any more thoughts, put them in the comments. I know someone asked me to cover AI stocks. Again, I've got a list of stuff that I do want to cover, so I'm going to try to get to as many as possible. Lastly, you do want to make sure that you sign up for the 2021 Investing Summit. You got me, you got the Ivy Investor, you got Tila Holcomb, who is an options expert. So you might want to take your notes for Plug, sign up, ask Tila what she thinks about put options on Plug and some other things. So this is something you definitely want to do. It's only $75, so you're really paying less than $10 expert, like $7.50 per session, which is really, really cheap for some great value. So I'll teach you in a better format with slides and things about how I spot these and how to invest with confidence and not confusion. How can you quickly start to make these decisions? Because if you put $1,000, $2,000 into it, you just made a $500 decision you made a $500 decision that didn't work out, right? At least right now. We'll see what happens in the future. Well, a session like this, 10, 15 minutes, you can save yourself $500. Easy, right? So these are things that that sitting down with an expert, attending these sessions can save you. So $75 can save you $500 in a case like this. All right, so that's it for me. Let me know what you think in the comments. I'll talk to you guys later. Bye.